This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on November 24th, 2016. Our time is 8:40 Mountain. Radio show runs 6:30 CHED, normally Sunday afternoon at 3. Today we are on from 10:30 to 11:30 a.m., prior to the face-off show, the Oilers playing Arizona at 1 o'clock. Good luck to our Edmonton Oilers. And I should mention, it is Thanksgiving weekend in the United States. We're taping on U.S. Thanksgiving. For all of those Americans that listen to our radio program online, we say happy Thanksgiving to you. Harold, a Canadian living in the United States, so happy Thanksgiving to Harold and his family. And it was an interesting week. U.S. dollar continues to go up, and we saw gold and silver continue to go down. And Harold, you have been getting so many calls. You said for a long time, get into the U.S. dollar. Have U.S. dollar assets that pay you in U.S. dollars if you're a Canadian. And that has been 100% accurate. You're getting many calls, lots of congratulations, and even further, when people thought gold and silver was going to go up because of Trump being elected, you went the other direction and said, no, it's going down. And once again, you were correct there. It looks like we could be headed towards around $1,000, and I guess we'll have to assess where things take us at that point. But congratulations on your call, and happy U.S. Thanksgiving.
Well, thank you very much, Randy. Thanksgiving's my favorite day, and being Canadian living in the United States, I get to experience it twice. It's my favorite day of the year, as I'm sure it is most. And I agree with you. I want to send a very happy Thanksgiving to all our American listeners, and there's many of them out there. All in all, the markets have basically done exactly what we thought that they would do. You know, the fact is for the last 4 to 5 years, we've been saying get into U.S. Dollar-based investments because the U.S. dollar is the strongest currency, will continue to be so. No matter how bad the economies are around the world, and let's face it, the U.S. is not in phenomenal shape, but they're in a lot better shape than every other country out there. That's why the U.S. dollar is so strong. Now, most of my clients right now are sitting in U.S. dollar-based investments that are private to our company, and that is available to all of our listeners to this show. But the bottom line is that it's extremely difficult at this particular point to make money. Interest rates are below 1%. They're soon going to go negative. They have negative interest rates in Europe, and that's coming to North America also. And that's going to be the destruction of most people's savings. Because the fact is that with negative interest rates or 0% interest rates, you could hardly ever retire. You know, there used to be a time when interest rates were at 10%, and you could retire off that. You had $500,000 sitting in the bank, and, you know, you put it into a CD or a safe investment at 10%, you know, you're making $50,000 a year, which a lot of people, when they're retiring, can adjust their lifestyle to live on. However, with interest rates now at 1% or less, really at 0.5%, that's almost an impossibility. That same $500,000 that if you were making 10% would make you $50,000 a year, now is making you $5,000 a year if you're getting 1%. Who in the world could live off of that? So what it does, unfortunately, it forces people into the stock market. And the stock market is probably the worst place to put your money. Now, at this point, the Dow in the U.S. is going up substantially. It broke 19,000 this week, and that's based on the euphoria and the feelings that Donald Trump is going to be good for the U.S. economy. The jury's still out on that. He hasn't even taken office at this point here. He's a bit of a loose cannon. He's certainly a bully, and, you know, he certainly puts his foot in his mouth an awful lot. But, you know, the American public has spoken, and they voted for him, as did I, and I think he deserves a shot. I think he's much, much better off, you know, than having Hillary or a politician in office. And, you know, to have a billionaire businessman could actually do very well for the country. So all in all, the Dow in the U.S. broke 19,000 for the first time ever, and gold has been dropping. Now, we're bullish on gold long term, but over the short term, you know, there's certain things that you must look at. And when gold hit 1380 at the beginning of 2016, gold was at $1,050. It went all the way up to 1380. And people that are, heavily into metals, and, I've been trading metals since the 80s, was very euphoric on what was happening with gold and silver. And many analysts felt that market, the gold market especially, was going to go back to 1900 to 2000, which is the prices that we saw back in 2011. However, there are certain things when you're analyzing a market that you've got to look at. It's just not the fundamentals of the market. The technicals of the market is going to tell you the short-term direction for any market. And basically, one thing that I look at is something called a commitment of traders report. And it comes out every month, and it basically tells you who is long and short the market, who's buying and who's selling. And basically, when the commercial banks are selling, when they're short the market, from my experience, that tells me that almost 100% of the time that market's going to fall. So we put out a heavy sell recommendation on a short-term trade at 1380 to sell gold, because we felt gold is going to go back to about $1,000 probably by the first quarter of next year. Well, we were right on that trade, because from 1380, the market now is at 1180. We've seen a $200 drop in gold, and I venture to say that we were the only analysts that predicted that market correctly. Everybody else that we follow was saying the opposite to what we were saying. Now, we've always been, in my career, somebody who has taken the other side of the trade. From my experience, and I owned one of the largest brokerage firms in North America for a long, long time, it's my experience that 90% of the time, speculators are wrong in the market. So that's why I've been an alternative asset type of investor, and somebody that's a contrarian to the markets. When everybody's going long in a certain way, it's almost a telltale sign that the market's going to go the opposite way. So at this particular point, we feel the best trade on the board right now is the U.S. dollar. The U.S. dollar broke par this week. A week ago, the market was sitting at 95 cents. Now it's sitting at a 102. In actual fact, the euro is sitting at 105. We're almost at par with the euro. We are also going to see next month in December the Federal Reserve raise interest rates. The U.S. is the only country in the world right now that can raise interest rates because of their economy and the strength of their dollar. So I feel that the U.S. dollar is going to make a major run. It's going to go to the 110 level, which is the highest level that we saw during the 1990s, when the U.S. dollar was the strongest currency in the world. So at this point here, our recommendations are very firm, and it's extremely important that if you're looking to make money, you're not going to make it in the stock and commodity markets. 90% of the people that trade in those markets lose their money, so why in the world would you want to do that? You don't want to leverage or speculate or do anything at this point. As far as buying gold, wait till the market comes back down. There's no doubt that gold's going at least to 1,100, possibly 1,000, and that's going to happen over a fairly quick period of time. Then, as Randy said, we'll reassess the market and certainly let you know when to buy gold. And we only buy physical because we don't want to leverage and we don't want to finance. You want to own every asset that you have at this point here. Again, at this point, it's extremely difficult to make money in almost any market. Now, throughout my entire career and the 35 years that I've been in the investment business, it's been my Canadian clients that have been with me every step of the way. When I first started in business, it was 15 clients that believed in me, and we went into a sugar trade together. This was back in 1982-83, and the trade turned out to be so successful that my clients made a fortune, and I made a lot of money, and I started my own brokerage firm after being with the firm for less than a year. And I grew it into a 300-man organization and 7 offices through Canada and the United States. So I've always traded the commodity market. But again, from my experience, people that trade that don't know what they're doing, 90% of the time lose their money. So that's not an option for us. Because of my relationship with my clients and because of our radio show, which is strictly here to give you the information that you need to make an intelligent decision. We give you good information. We told you to short gold. You could, for the right speculators, they could have made a fortune in that over the last few months. The same thing with the U.S. dollar, and we feel the Canadian dollar is going to fall substantially. We feel the U.S. dollar is going to go to 110, and we feel the Canadian dollar is going to drop to 160 to 170. There's a huge amount of money to be made in the U.S. dollar at this point. And we have private investments that we allow our Canadian clients to partner with us on. Our clients are making over 25% a year in U.S. dollars, which is unheard of in this particular investment climate. But again, we do not trade the same as other firms. In fact, we're extremely conservative, and everything that we do is physical. You own the actual investment, and that's extremely important. So, again, at this point, Randy, I foresee the U.S. dollar being the strongest currency. We want to capitalize on that. So any of our listeners out there that need to know what to do with their retirement savings plans, which, let's face it, in the last decade have not made any money, we can help you get out of bad investments into strong private investments with my company, where you can be my partners, and I'll show you how to do it in U.S. dollars, which will literally make us a fortune. So, Randy, I'm extremely excited at a time when most people are extremely nervous because of the directions that the markets are taking and the uncertainty in the world today. Again, I've been in the business 35 years, and we've made some tremendous calls, probably the biggest being, gold from $250 to $1,900. Many of our clients became wealthy because of that particular trade. So we need to get out of Canadian dollar-based investments, get into the U.S. dollar, because, number one, we'll make money on the investment, and then we'll make money on the currency, and that's a huge, huge benefit when you're trading in these markets.
How do you invest today so you can retire tomorrow? Speak with Harold Siegel. In the environment that we're in, it's very difficult because of negative interest rates. Connect with Harold, rarecoloreddiamonds.com or rarecoloreddiamonds.com, 1-800-432-1022. 1-800-432-1022, rarecoloreddiamonds.com. Harold has programs in place where you can start making money today. Our featured diamond of the week is a 0.53 carat princess cut fancy intense yellow green. And this is a diamond with a beautiful, beautiful color. You can see it. Featured diamond of the week, rarecoloreddiamonds.com. The second half of the show, we'll get into diamonds in detail. One of the movies that I've seen recently, and huge thumbs up if you are somebody who is interested in finance and loves movies, The Big Short was just outstanding. It was about the people that shorted the housing market, the mortgage market, and made billions of dollars during the financial crisis. Now, a Big Short investor who made a killing predicting the financial crash has a worrying new prediction. Steve Eisman, an investor who made a fortune by successfully predicting the 2007-8 financial crash, is back with a worrying new target: European banks. Now, we've talked about this on the program before. We've said European banks, they do not look good at all. And now we have Steve Eisman coming out and saying that. He says, Europe is screwed. You guys are still screwed, Eisman told The Guardian in an interview published on Saturday. His concern is that European banks, particularly Italy's, hold bad non-performing loans that are improperly valued, posing a very serious risk to the bank's solvency. In the Italian system, the banks say they are worth 45 to 50 cents on the dollar, but the bid price is 20 cents. If you were to mark them down, they would be insolvent. Now, hear that again. If you were to mark them down, they would be insolvent. In short, if many European banks admitted the true value of their loans, they would go under. Eisman believes potentially sparking a new financial crisis. Eisman was featured in Michael Lewis's award-winning book, The Big Short, as one of the few people to correctly predict the financial crisis of 2007, and it was masking, obviously, a bigger problem in the United States. He made a fortune for his company. Now, in the movie, he was played by Steve Carell, and they changed his name to Mark Baum. But to follow up on this, and I would encourage you to get our free weekly newsletter from Harold, 1-800-432-1022 or rarecoloreddiamonds.com. Harold will be happy to send it out to you via email free of charge every week, because we found the Big Short story this week and Italy's third biggest bank is running out of time. The endgame may have finally arrived for Banca Monte. Now, it's Italy's third biggest bank. It has repeatedly skidded to the edge of collapse only to be bailed out by investors or the government. Now, Executive Officer Marco Morelli has until year-end to raise 5 billion euros of capital, 7 times its current market value, and offload almost 28 billion euros in soured loans to save the world's oldest lender. Time is running out, says Stefano Garola, who helps manage about $40 billion in Lugano, Switzerland. It's like a huge puzzle, and one missing piece will doom the whole project. As part of the plan, Monte Paschi is proposing a voluntary swap of 4.3 billion euros of subordinate bonds to reduce the amount of stock it would need to sell. The bank expects holders of junior bonds to swap about a quarter of the available notes for equity in the first stage of the rescue plan. It may also announce an offer for deeply subordinated securities known as fresh bonds at 23.2% of face value, subject to review by authorities. The bank said on Wednesday they will be voting on all of this. But Harold, Italy's third biggest bank, time running out. You have Steve Eisman, the Big Short, coming out saying that Europe is screwed. You guys are really screwed. And we've talked about this before, about the European banks. And if that happens, in my opinion, you'll see people move even further into the U.S. dollar because people will want to get out of the euro. As we talked about on the last show, we had a story in our newsletter. We have a follow-up story this week. There is a strong belief that the euro and the U.S. dollar will go to parity. And there is a strong belief that it could happen very, very soon if these banks start to tumble. So, Harold, now is a time to obviously look at the U.S. dollar for strength. It's the least dirty shirt among all the shirts out there, but it's at this point it's proving to be, as you recommended, the best place to be making money today.
You better believe it. You know, the fact is that the U.S. dollar will be at parity with the euro by next month because, according to my predictions, when the Federal Reserve raises interest rates by 0.25% next month, which I'm 99.9% sure they're going to do, the U.S. dollar is just going to take off. Even though a lot of it is already built into the market, when they actually do it, you're going to see the U.S. dollar. So 110 was the high that we saw in the U.S. dollar back in the 90s. That's when the stock markets were strong and the dot-coms and everything like that, and gold was at $250. Don't forget, this is a direct parity between gold and the U.S. dollar. When the U.S. dollar is strong, gold is extremely weak. You know, but this time's going to be different. We could go to 110 in the U.S. dollar, and instead of gold being at 250, gold's going to be at 1,000. So it certainly tells you that there's still a lot of interest in gold, and there's no doubt in my mind that gold's going to take off again. But again, I would not be in the foreign currencies at this particular point. Again, you want to buy the U.S. dollar, and when I say buy the U.S. dollar, you want to get out of Canadian dollar-based investments. You're just not going to make any money with them. You know, the fact is we all love Canada, but the oil market's in trouble. You know, with the with what Toronto and Vancouver did, imposing a 15% tax, you know, for foreign speculation, I think was a foolish move that's going to hurt the real estate industry. And with the new C-15 bill that the Canadian government signed, which is, I'm just absolutely shocked that they would do this to us. But the fact is that you can't keep your money in the bank anymore. Anything over $100,000, the banks can take your money if they close, and that's something that the U.S. government, the Canadian government, signed off on. I'm absolutely appalled at that. But again, there's no doubt that it's extremely confusing out there. Please give me a call. I care about our listeners and about our clients. And again, my clients are sitting in very safe investments right now that are based in U.S. dollars, but their returns are huge. We're making over 25% a year. And again, when you account for the U.S. dollar, I think ultimately the U.S. dollar is going to 115 to 120, and the Canadian dollar will be worth half of what the U.S. dollar is worth. So you still have time to do this. Let me show you how to do it, and it's something that could literally change your life financially.
This is the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We're on prior to the Oiler game today. Normally we're on Sunday afternoon at 3. Today, 10:30 to 11:30 a.m. The Face-Off Show, Arizona Coyotes and our Edmonton Oilers Face-Off Show 11:30, Game Time 1 o'clock. Connect with Harold, 1-800-432-1022, 1-800-432-1022, the website rarecoloreddiamonds.com. Rarecoloreddiamonds.com, our featured diamond of the week, 0.53 carat princess cut, fancy intense yellow green. And the color on this diamond is absolutely spectacular. To follow up about European banks, it seems, well, and Harold warned us about this a few years back on Bloomberg when he was interviewed by Deirdre Bolton about diamonds. He said China is in tough shape. And the IMF says Chinese banks are disguising a massive amount of bad debt. China's banks are disguising bad debts by turning them into securitized packages rather than write them down as non-performing loans, according to the IMF. The untradeable debt comes from China's shadow credit world, which has generated a massive amount of credit that has the potential to become suddenly illiquid. The debt consists of interbank loans in a structure potentially susceptible to rapid risk transmission and destabilizing liquidity events, says the IMF. The amount of shadow credit grew 48% in 2015. The IMF says the equivalent to 40% of the bank's corporate loans and 58% of GDP. If any of this sounds familiar, that's because it is. It's similar in principle to the way the U.S. banks disguised bad mortgages inside securitized packages before the great financial crisis of 2007-2008. And we have said for a long time, the more things change, the more they stay the same, that nothing was ever really solved after the financial crisis. And here we have in our show today, Steve Eisman from the movie The Big Short, coming out and saying European banks in deep trouble. Italy's third largest bank in desperate amount of money trying to find 5 billion euros, going to be very, very difficult. And now we're finding out about the Chinese banks disguising a massive amount of bad debt. So now is the time to obviously profit and protect the money that you have. Profit from what's happening and protect. Have that insurance policy in your portfolio. How do you invest in today's environment? Speak with Harold Siegel. He will be more than happy to help you. He has investment programs where you can start making money today. Connect with Harold, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 24th, 2016. It's U.S. Thanksgiving and U.S. Thanksgiving long weekend. Obviously, our show is Canadian. We run on 630 CHED in Edmonton, normally Sunday afternoon at 3. But we have a lot of people who listen to us, and they listen to us online, and they're from the United States. So we say Happy Thanksgiving long weekend to our American friends. We're on early today on Sunday from 10:30 to 11:30 a.m. The Edmonton Oilers pregame show coming up, the Face-Off Show at 11:30, Oilers in Arizona at 1 o'clock. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. If you ever miss a radio show, don't forget they're archived on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. It was another week where we saw the U.S. dollar going up. We saw gold and silver going down. And that is a prediction that Harold has made. And we have a lot of listeners who have made a lot of money off that trade. And Harold went against the grain and said that gold and silver would be going down when many believed it would go up as a result of a Trump presidency. The U.S. dollar, as Harold said in the first half of the show, it's almost at 100% now. In fact, it is at 100% that the Fed will raise interest rates in December. That is the percentage, the odds that everyone is giving out 100%. Janet Yellen spoke during the week, and she said, yes, rates will go up relatively soon. Death taxes and the Fed rate hike in December are life's only certainties, according to the bond market, which now has chances of an increase in December at 100%, according to Bloomberg. And one thing that Harold touched on during the week, the S&P 500 index, Dow Jones, also the NASDAQ and Russell 2000 index rallied together to all-time peak highs for the first time since 1999, and the TSX hit a high that it had hit back in 2015. One of the things that we have talked about in the past is a cashless society. And we did inform you last week that in India, they told the Indian citizens that, hey, we're basically getting rid of 86% of the currency. They're really moving towards a cashless society. And one of the reasons that we're so careful about this and advocate for hard assets is a quote from Jim Rickards, and this really says it all when it comes to a cashless society. The whole idea of the war on cash is to force savers into digital bank accounts so their money can be taken from them in the form of negative interest rates. You might think you can get your cash, but you can't. They're being herded into digital pens, which are the banks, and that from Jim Rickards. And Harold, I know that that's why we advocate hard assets. You can have it in your possession, and you've said for a long time that we have to be very careful about this cashless society that's unfolding around us.
It's a frightening situation, and again, it's something that the banks have talked about and wanted to do for a long time because, let's face it, the banks are going to make a fortune off of this. You know, just look at the transaction fees, because if there's no cash, and that will happen within the next 10 years. So depending on how old you are, your children or your grandchildren may never even know what cash is. Everything will be Apple Pay, Google Pay, debit cards, credit cards, chips, you know, embedded in your body type of thing. But that's the way the world is going to go. And just think about it. Every single time you buy a stick of gum or put gas in the car or buy food or go to the movies, there's transaction fees. The banks and Apple and Google are going to make a fortune off of this. And then just think about this. Throughout, you know, everybody who's in their 40s, 50s, 60s, 70s, and older certainly knows that, you know, the banks were there for their reason, but you could put your money in the bank. You could feel safe putting your money in the bank and get interest back, depending, you know, back in 1982, when interest rates were at 20%, you know, the fact is that it was difficult back then because you were coming off a heavy inflationary time and that an interest rate skyrocketed, but at least you could get return on your money. Now you're only concerned with return of your money because the banks can steal it. When I said earlier in the show that C-15 bill has been approved in Canada by the Canadian government, it entails several things, but the thing you got to look at is the bail-in. See, in 2008 and 9, when the mortgage debacle happened in the United States and the markets plummeted and the banks were in trouble, the U.S. government and the Federal Reserve stepped up. They printed a ton of money. It was called quantitative easing, and they bailed out the banks. And they bailed out General Motors and, you know, the big insurance companies and everything like that. But the U.S. government stepped up and bailed out the banks. They put money in to get the businesses going again. In Canada, what they've approved is a bail-in. It means, and listen to this, that if you have your money sitting in the bank, let's say you have $500,000, you're only insured by the CDIC for only $100,000. If that bank goes under or is in financial trouble, instead of the Canadian government who owns that bank bailing it out, they say, no, we're not going to do that. That means that if you have your money in the bank, you're a creditor of that bank, and they can take your money, and they will take it. It's already happened in Cyprus. And they will give you worthless shares in that bank. So you would literally, if you had $500,000 in cash sitting in your bank, 100,000 of it is insured, and the 400,000 would be lost, and they could legally take that money, and they will do that. It happened in Cyprus in 2013, was it, Randy?
That's right, yes.
And we monitored it very closely, and we certainly said that this is a precedent for what's going to happen all around the world. When these banks can steal your money, and in Cyprus, they did not challenge it. They did not throw rocks at the bank windows or riot or anything. They accepted it. And that's what's going to happen here. In fact, the Canadian government has actually put that into law. So it means that even though the banks in Canada are owned by the Canadian government, they're telling you right now that they're not going to back it up. So what does that tell me? It tells me that the banks are in trouble, which they are almost all over the world. And the fact is that never keep more than $100,000 in a single account. If you don't understand C-15, give me a call. I'll spend as much time as you need to explain it to you so you don't fall into a trap. You know, the fact is that oil prices have plummeted. Alberta's been in big trouble. Fort McMurray had the fires and everything like that is hopefully going to recover soon. The real estate situation has peaked, and now they've added a 15% tax in Toronto and Vancouver, you know, to curb speculation. I don't like what I'm seeing there at all. This spells a lot of danger to me, and it seems like the government is just starting to posture themselves. Again, it really sent an alert to me when they accepted bail-ins instead of bailouts, and that certainly showed the picture that I was concerned about. Again, you've got to get out of Canadian dollar-based investments. You got to get into investments in the United States in U.S. dollars. We have private investments. They're not stocks or commodities, or these are investments that I create myself, and I deal in myself, and I buy myself, and I allow my clients to partner with me. So, again, we've been doing extremely well, and we care about the listeners and clients of ours that listen to the show. And the reason that Randy and I do this show every single week for the last 17 years is that we need to give you the information that you need to make an intelligent business decision. And again, fortunately, the information we've been giving has been extremely strong. On top of that, not only are all these situations happening around the world, but you've got a strong situation in diamonds right now. You know, in actual colored diamonds are doing phenomenal. In fact, this year was the year of blue diamonds. We've seen blue diamonds go to auction this year and hit record prices. 10 years ago, you could have bought a vivid blue diamond for $200,000 a carat. Today, it's almost $5 million a carat. There's no investments on earth that compare to what's happening in the alternative asset markets at this particular time.
Speak with Harold about investing in hard assets. He has programs in place where instead of sitting in a GIC losing money, you can be making money today. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 0.53 carat Princess Cut Fancy Intense Yellow Green. And we have had some beautiful diamonds as featured diamonds recently. In fact, I hearken back to a few weeks ago when we had a 0.68 carat Radiant Cut Fancy Green Blue. And this was one of the most beautiful colors I think we have ever seen as a featured diamond. 0.68 carat Radiant Cut Fancy Green Blue, absolutely a museum piece, gorgeous. Ask Harold about this diamond. It is equally beautiful. A 0.53 carat Princess Cut Fancy Intense Yellow Green. The color on it is stunning. Now, last week we told you about auctions in Geneva for Christie's and Sotheby's. Coming up, Christie's is holding an auction on Tuesday in Hong Kong, and there will be colored diamonds that will be auctioned off. We will let you know how those auctions go. But one of the interesting things about owning diamonds is that when you make that investment in a diamond, you can name it, and you can even change the name. The $18 million pink diamond that sold last week has been given a new name. An Asian private buyer who acquired a pink diamond at Christie's Geneva, he calls the stone the Light of Memory. The purchaser snapped up the pear-shaped 9.14 carat Fancy Vivid Pink VS2 Clarity for $18.3 million or $2 million a carat. The winning bid was made over the phone. According to Christie's, the diamond was previously known as the Pink, and it was estimated to go for around $16 million, went for 18.3 million US, Swiss francs 18.1, and he changed the name to the Light of Memory. One of the other stories we have in our free weekly newsletter, I encourage you to get it from Harold, 1-800-432-1022 or rarecolorediamonds.com. Connect with Harold. Get our newsletter. It's the companion to our radio show. You'll be on the same page that Harold and I are on, seeing the same information. We send it out via email free of charge every week. The Foxfire Diamond is bedazzling the Smithsonian newest rock star. The largest gem quality diamond ever found in North America, glows bright blue in the dark. The largest gem quality diamond ever found in North America is on display at the Smithsonian for 3 months in its rough, uncut state. And check that story out. This diamond is absolutely gorgeous. But Harold, we're in a time right now where people have to understand that hard assets, it's that insurance policy in your portfolio that you need. People need to take a look at alternative assets. When we hear about Chinese banks being in trouble, we hear about European banks being in trouble, you want to have that insurance policy in your portfolio at all times. We're seeing art do well, obviously at auction, cars, you look at watches, handbags. We can't forget about, there was even a Wayne Gretzky card that sold for a record price. Hard assets, collectibles are doing very, very well. And now is the time to speak with you and get involved in the diamond market as soon as possible, especially considering the U.S. dollar is appreciating. So now better than ever to get involved as soon as possible, because you want to take advantage of the appreciating U.S. dollar in the days, weeks, and months ahead.
Oh, you bet. It's a life changer, Randy. There's no doubt about it. You know, the fact is that most people don't understand the currency markets. You know, when you say the dollar's at par or broke par, or, you know, will be at parity with the euro. But the fact is that I've traded these markets for 35 years, and I have a good understanding of them. And what we tend to do best here is we pick trends, not short-term trade, not a short-term trader. I'm a trend setter in the sense that, you know, we look for long-term trades. Our recommendation in gold and silver went from 2000 to 2011. There was an 11-year bull market, the biggest bull market of all time, and fortunes were made during that time. You know, most investors out there know nothing about trading these markets, but they're imperative. Gold is a very important market that we don't trade. We buy it and hold it. You know, but the market will give us opportunities from $1,380 down to $1,000 is almost a $400 move in the market. We want to take advantage of that. And for some people that buy gold at higher levels, we'll give you an opportunity to average it down. But most of our investments deal in rough diamonds. You know, we're miners and cutters. My partners are fourth-generation diamond miners from Venezuela. You know, they've been in this business. It's in their blood. What I did is it took it to a different level because my expertise is more in marketing than theirs, and we've done a phenomenal job. We've taken a small little business and turned it into a massive business and allowed our Canadian clients to be our partners in it. So not only are they profiting on the business, but they're profiting in American dollars, and that's going to turn out to add 50% or more to the bottom line for us. So it's an extremely exciting time for us, where it's a confusing time for most. So again, if you are a listener to this show and you're concerned about the direction in which you're heading and have thoughts of hopefully one day being able to retire, give me a call and give me an opportunity to talk to you and see if I can shed some light on your situation and help you move forward. Again, that's what Randy and I do.
Featured Diamond of the Week, and this is a diamond you must see. If you love green diamonds the way I do, it's green colored. It's a 0.53 carat princess cut, fancy intense, yellow green. Yellow green, gorgeous. See it online. rarecolorediamonds.com. Featured Diamond of the Week. One of the diamonds that we've talked about extensively over the years, pink diamonds from the Argyle mine. And they recently announced that their pink Argyle tender, which wrapped up, was another massive success. They had record-breaking prices for the tender. Now, a lot of people may be somewhat skeptical about investing in diamonds, but it's interesting to note that down in Australia, self-managed superannuation funds, which are basically like RRSPs or, something along the line of a RIF, TFSA, people are buying Argyle pink diamonds. One of the exclusive sellers of Argyle pink diamonds says a number of stones are being purchased for self-managed superannuation funds. Rio Tinto's Argyle mine in the eastern Kimberley region in the far north of Western Australia is the only source of pink diamonds and is scheduled to close production within a few years. And an Australian jeweler called Linley's is actually finding that a lot of people are using the most concentrated form of wealth in the world, pink diamonds, to invest in their retirement funds. And Harold, that does not surprise me because we've seen that as well. You were the one who really brought this to us over 11 years ago. In 2005, you wrote your article, Naturally Fancy Colored Diamonds, the Best Kept Secret. You started up rarecoloreddiamonds.com, brought to our attention pink diamonds, and you said this is something that is an investment. In the world that we're living in today, this is an alternative asset. It's an alternative investment. And it has turned out to be a massive winner, especially now that we know within a few years the Argyle mine is shutting down. 90 to 95% of the world's pinks will be gone. But in Australia, people are investing in them, and you can see that it's starting to spread around the world. And we were really one of the first radio shows to ever talk about that. I would say the first, because our Canadian listeners have benefited from Harold's knowledge for a long time, and I'm happy to see other countries are starting to get on the bandwagon and invest in pink diamonds for retirement as well. And Harold, there still is time to get involved in this market.
Oh, you better believe it, Randy. It's probably the best diamond investment right now that you can make. Again, 95% of all pink diamonds, which is a very tiny number. You're not talking about something that is mass marketed. Most people have never even seen a pink diamond, nor do they know that they exist. But they are extremely valuable, and as you mentioned before, the most concentrated form of wealth on Earth. So 95% of these pink diamonds come from the Argyle mine, and the Argyle mine is closing by 2020. It's only 3 years from now. So you could put away an Argyle pink diamond, put it away for the next 10 years, and you could see massive returns on your investment. And not only do we sell investment quality diamonds, but we also have H. Siegel Fine Auctions, which is the secondary market that will resell them for you. In fact, we have an auction coming up in January, which is going to be our first auction since we've actually updated our website to the new technology where you'll be able to attend our auctions actually on your iPhone, your iPad, or on your personal computer, which, again, has never been done before. So, again, we're extremely excited about what's happening, and you can get involved in Argyle pink diamonds starting in and around the $25,000, $30,000 level, but it would not be unusual, depending on the color and the strength of the color and the clarity and everything of that diamond, to see it go up substantially, double, triple, quadruple over the next several years. It's already happening in the diamond market, but again, we'll never get, and mark my words on this, we will never have another opportunity in our lifetime to take advantage of a class of diamonds like pinks that are going to be extinct, because almost every pink diamond comes from that Argyle mine, and it's closing before 2020. So it's a rare opportunity. If you understand supply and demand, demand is extremely high and supplies are the lowest they've ever been, and soon there will be none of them. So it's an outstanding investment. They're smaller diamonds. They're also known as portable private wealth. You can travel anywhere with them, where you can't cross a border with more than $5,000 in cash in your pocket. You could wear a $50,000 or $1 million diamond, and nobody would even know the difference. So, again, there's extremely important opportunities out there. You just have to understand where they are. We have private investments that we allow our Canadian clients to invest in with us, and they're all based in U.S. dollars. It's really turning out to be an exciting situation, and most of our clients can now see a clear path to their future where they certainly couldn't before.
Speak with Harold about investing. 1-800-432-1022, 1-800-432-1022. rarecoloreddiamonds.com is the website. This is the World Financial Report on radio with Harold Siegel and me, Randy Marshall. Coming up at 11:30, the Oilers are playing the Arizona Coyotes at 1 o'clock. The Face-Off Show, we are minutes away from the Face-Off Show. Talking about pink diamonds, we did mention Geneva. Christie's and Sotheby's had sales last week in Geneva. They have an auction coming up on Tuesday, Christie's in Hong Kong. But Lawrence Graff, to give you an idea of how popular pinks are right now, Lawrence Graff, one of the biggest diamond investors and brokers in the world, spent $37 million on pink diamonds. And Sotheby's sold $136 million worth of jewels in Geneva. Graff Diamonds took home 2 pink diamonds that went under the hammer. The first of those was a step-cut 17.07 carat fancy intense pink VVS 1 clarity diamond ring, which sold for $20.8 million. That was $1.2 million per carat. The stone was the top lot at the Magnificent Jewels and Noble sale Wednesday, beating the estimate of $11.8 million. Graff's second purchase of the evening was a pear-shaped 13.20 carat fancy intense internally flawless, which he purchased for $16.2 million or $1.2 million per carat. The stone also surpassed its guided price of $8.8 million, and in total, Graff forked over $37 million on the 2 pink stones. The big diamond, the sky blue diamond, it was a square-cut 8-carat fancy vivid blue VVS1 Cartier ring. It sold for $17.1 million or $2.1 million per carat. And we will have some auction results for you on next week's show, as they have an auction in Hong Kong, Christie's, on Tuesday. Harold, people have to, and we have approximately 2 minutes left here. It's very hard to retire in the financial world that we find ourselves in today. You have Bill C-15, the bank bail-ins, negative interest rate, weak Canadian dollar, the housing market in Vancouver, cashless society, people looking for answers, and that's why we do this radio show, to give you the answers you're looking for. And if you have any questions at all, speak with Harold, 1-800-432-1022, rarecolorediamonds.com. And Harold, I know that you take many calls a day, and you would be happy to speak with any of our radio listeners.
I love to speak to my listeners and clients, and we do it on a daily basis. We've been doing this show for 17 years right now. Again, we take our business very, very seriously. We've never missed a radio show. And as far as the information goes, it's extremely important, obviously, and we take pride in the information that we've given you. So after 17 years of doing the show and several winners, we're very, very excited about what's coming up for our clients and for our company. So stay tuned to our radio show. Give me a call. I'll explain to you what your options are as moving forward as far as investing in U.S. dollar-based investments, where, again, my clients are making over 25% a year now. And, again, I would love to see our other Canadian clients involved also.
Harold, you're a Canadian living in the United States. We wish you a happy U.S. Thanksgiving to you and your family. Enjoy the day. Thanks for taking time out of your holiday Thursday, U.S. Thanksgiving, and being a part of our show. And thank you for your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
As I said, lots of financial questions today with so many people looking for answers. How do you invest today so you can retire tomorrow? That's why we are doing our radio show on a weekly basis. You can speak with Harold personally, privately. The call is free. It's confidential. 1-800-432-1022, rarecolorediamonds.com is the website. Our featured diamond is a .53 carat princess cut fancy intense yellow green. See it online, rarecolorediamonds.com, featured diamond of the week. Good luck to our Edmonton Oilers against the Arizona Coyotes. Face-Off show is coming up. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.